Hello and welcome. You're watching Your Trades with me, Ankur Mishra and Mansi. The way the markets have closed, Mansi, but despite a hard battle between bulls and bears, finally the red color prevails and Nifty has still defended 25,000 mark.
Absolutely, the battle between the bulls and the bears win, as we clearly see. It was a very range-bound market, Ankur. During the entire session, if you see, of course, the markets did sustain on the 25,000 levels, but we also did see 25,163 on the upside, and in the morning we had expectations that the markets will touch base 25,200 and above. But those expectations didn't really work out for Nifty. Talking about Bank Nifty also, it was an absolute volatile trend in Bank Nifty. During the start of the day, it was just the broader markets which did see a breather or a backseat. But by the end of the day, both the benchmarks as well as the broader markets were not performing in trade. And absolutely downtrends in Bank Nifty also, as we see 56,754, 773 levels, around 200 points downtrend on Bank Nifty. And today, Nifty was outperforming Bank Nifty, though the market setup was weak. But if you compare both Nifty and Bank Nifty, the situation or the picture of Nifty was better than Bank Nifty at least. Talking about the stock-specific approaches of the market was absolutely a stock-specific market on the basis of the result flows, on the basis of the news flows. The stocks were doing the rounds, and Eternal, the hero of the day. Since yesterday, the company did post its numbers and we did see a 7% up move yesterday, and the move was sustaining even today, 10 to 11% up move. The management commentary was quite good, brokerages were quite bullish, and as you clearly see that Eternal's market cap did soar past 3 lakh crore, which is a whopping 3 lakh crore market cap, and that too just in 2 trading sessions. So clearly a stock which was in the watch radar of all the market participants, and of course on the watch radar of the brokerage house as well. Apart from Eternal, the larger players which were helping the markets were ICICI Bank, HDFC Bank, Titan, HUL, Maruti, and on the flip side, there were players like Reliance, Infosys, L&T, ITC, and SBI, which were negative in trade during the session, Ankur.
So clearly, if you talk about today's market, it was an eternal day where Eternal was the hero. Apart from that, what made the headlines? So Ultratech target raised on stable price view, and Bajaj Finance MD Anup Saha has quit the company in a quarter which is weak for Colgate and also premium business. Apart from that, CVC, Chris Capital, Permira I stake in Nuvama, that is an ET Now exclusive. Also, Alliance Geo Financial to form new reinsurance JV, and what ET Now exclusively learns that it will be aligned as per the need of the regulator to comply with the norms.
Okay, so these are all the top news which were in focus during the session today. But now we also have our market expert, and let's try and understand what should be your strategy for tomorrow considering the levels and the situation of the market for today. We have Ajit Mishra, SVP Research Religare Broking, joining with us. Ajit, good afternoon. Thank you for giving your time to ET Now. First things first, what's your view on the index? Because today we did see a volatile trend, in fact a downside trend where the markets were absolutely range bound, be it the benchmark or the broader markets.
Yeah, good afternoon, Mansi. So that's right. In fact, yesterday's rebound can be largely attributed only to the banking and financials majors. They did exceptionally well despite the underperformance from the heavyweight like Reliance Industries. Today, with banking again taking a backseat, we saw the Nifty fail to cross the hurdle of 20 EMA, which is placed around 25,200 mark. So until we do that, Mansi, I believe that the sideways tone might continue in the index, with the bulls trying to defend 24,900 mark and bears are holding ground around 25,200. So this 300 point range is something that Nifty might continue to hover in. But at the same time, stock specific opportunities across sectors is basically which something traders should be focusing on. Citing that the earning announcement is triggering move, strong directional move like Eternal, for example, in today's session was among the top performing names. So these kind of opportunities, something that participants should be focusing on until we see a decisive break from this particular range of 300 point range in the index.
Ajit, hi, Ankur this side. What is more probable, Nifty reaching towards a 24,500 mark or 25,500 mark?
So Ankur, see, still I would give benefits of doubt, index inching higher first before making any further decline, because banking, which holds considerable weight alongside with the financials, they're still holding strong. So though today it was a day of profit taking, but if you see the private banking majors like ICICI, HDFC, uh, Axis is also trying to form a base. So all this, heavyweights are indicating alongside with Bajaj Twins and all that banking and financial is stable. IT, I believe, is going to trying to form a base in like maybe in a week's time. So downside seems capped. Considering that we have two of these key sectors which hold maximum weight in the index. So probably once we cross this 25,200 mark, the next hurdle could be close to around 25,500.
I should say it was a very tricky question for Ajit to answer. The levels are quite volatile markets, and as we see, there are expectations which the day starts with, but then during the session, the entire picture changes. However, it is a stock-specific market, and Ajit, when we talk about stocks and sectors, what are the stocks on your radar?
Right. So Mansi, I feel that in a market like this, one should position on both sides. Though it's easy to look for long opportunities, but at the same time, as we are still struggling below the key levels, one should maintain position on both long and short sides. So metal as a pack is holding strong, wherein Hindalco after this recent dip as inching higher, and we expect this momentum to further strengthen. So 715 is what we are eyeing in the near future as a target. So with stop at 677, one can go long in Hindalco. At the same time, within the auto space, Tata Motors has been underperforming for quite some time. And in fact, it has formed a fresh shorting pivot after this recent attempt of recovery failure. So 655 is what we are eyeing in the near future as a target. So here one can go short with 684 as a stop loss.
All right, Ajit, thank you so much for that advice and also recommending the stocks of your choice. But with that, market is not very decisive. We don't know which direction it will move. But Srishti is ready with two of the stock picks of the technical chart, which she chooses every day to tell us. Srishti, what's in your list today?
So we have got two breakout stocks that really popped up on the screens. And firstly, let's have a look at one of the cement pack, because yes, of course, post that Ultratech commentary, all the cement counters were buzzing, and one such counter related to the company itself was India Cement. Look at the 6 to 7% jump in today's trading session. Late, you have seen that up move slowly and gradually on this particular counter as well. But for the past 2 weeks, the stock was actually consolidating and taking resistance at their 350 odd levels. In today's trading session itself, the stock managed to break above those levels. And not just that, look at the long-term chart as well. It is now approaching its key resistance of 370 rupees. And that will be interesting to see that whether or not the stock manages to move above that. But a bounce indeed today happening from 20-day moving average is what we have seen. But moving on to the next counter there, and that is NLC India on charts. We don't discuss this stock very much, but today what we have seen interesting is that after 3 days of selling, continuous selling, the stock managed to move and rather actually move in the same direction, or rather jump from those 20-day moving average is what we have seen, and actually managed to move above those levels of 230 odd rupees, which was a bit of a resistance for this particular stock, and hence we have chosen this stock as the second breakout candidate for today. Back to you.
Absolutely, Shrishti. Thanks for all of those stock updates. And these are the breakout stocks, India Cement as well as NLC India. And India Cement, in particularly cement pack, is surprising the market at present. The seasonality factor, the onset of the monsoon is also not denting the levels or the speed of the cement pack altogether. And we see a lot many cement players. Of course, India Cement was an outperformer. But other than that, a lot many cement players also doing and trading positive during the sessions. Moving ahead, let's now have a look at the word from the wise. Well, discretionary consumption players could continue to outperform FMCG names for now, says Harsha Upadhyay of Kotak KMC. He likes travel and tourism plays and quick commerce. Let's listen in.
Within the overall consumption basket, we think that discretionary consumption will still continue to be better than staples. That's our view at this point of time, until we see a full-fledged recovery from rural economy, which could be a couple of quarters away in our opinion. As far as discretionary consumption is concerned, I think you need to slightly look at some of the sectors which, from an amphi-sectoral basis or from a market perception perspective, may be classified into other sectors, but they are essentially consumer discretionary segments, such as hotels, travel, tourism, aviation, and even quick commerce, in our view, is likely to do well. I think these are some pockets of consumption which we are very, very positive on. As far as FMCG is concerned, we would probably wait for a little more clues in terms of how volume growth is likely to pick up. The valuations are not so cheap. While the stocks may not have done much in the last couple of years, even the earnings have not moved anywhere. So to that extent, the valuations have not really changed for this basket. So we would wait for a little more clarity on that side.
After words of wisdom, let's talk about stock of the day. Yes, I'm talking about Eternal, which was up more than 10% in Tuesday's trade, and that happened despite shrinking profits as the management remains optimistic on Blinkit's growth progress and narrowing losses. Brokerages across the board have raised targets as well, with Jefferies eyeing the 400 rupee mark. But what should investors do? Book profit, or is there more upside which is there in store? Will Eternal sustain its performance amid rising competition? Snehi and Varun join in bull versus bear case. Let's go across to them.
Well, yes, let's begin by looking at the bull case first. It's all in the stock price itself today, because if you take a look at the stock price, that's up about 13%. We've seen a block deal, new record high on the market cap, a 3 lakh crore market cap now, a new record high in terms of the stock price as well. The street is supportive of Q1 earnings, and let me tell you why. If you take a look at the overall numbers, the revenue is up more than 70%, wherein we were expecting a jump of 57.5%. So big beat versus our estimates. The B2C business NOV, that's the net order value, is also up 55% on a year-on-year basis. They also have large cash balance on their books, and brokerages, barring a few, have updated or upgraded all their targets as well. So looking very positive on the overall front, Varun.
Definitely, there are several good points, but what matters to an investor, to a shareholder, is the profit of the company. And if you look at the profitability of the company, that is down by around 90%. It's just 10% more, otherwise the company would have been in losses. Other than profit, if you look at the overall EBITDA margins of the company, even that has been a miss. So if you look at the operational performance of the company, that has been weak. No doubt, you can say that the revenues were good, but yes, the operational performance was weak, and also the company has actually reduced its profit by around 90%. That's a big number.
Well, absolutely. So this is just a broad snapshot. Let's divide the business into segments, and let's first take a look at the food delivery. Their average monthly transacting users have seen a spike of about 2 million people just on a sequential basis, and mind you, these are all unique users. So that's a big uptick coming in for the food delivery business. The adjusted EBITDA margins are at 5% from 3.9% on a year-on-year basis. So big jump over there as well. The GOV growth has sustained above that 16% mark. It's at a 3-quarter high as well. And the management has also said that their NOV has bottomed out and there are only good days ahead, Varun.
Definitely, the food delivery business was a tailwind before. Now it has become a headwind for the company, because if you look overall net order value, that is up by around 13% versus the 14% growth that the company has delivered in the previous quarter. Also, if you look at the margins, there is a decline on a quarter-on-quarter basis, and this is actually after 14 quarters that the overall margins have shown a decline. Also, the management has reduced the overall growth guidance from 20 to 15%. So there is nothing to rejoice over the food delivery business of the company as well.
So, okay, if you say the food delivery is a headwind, let's talk about the tailwind this time, and that's the entire quick commerce business, the Blinkit arm of the company. That segment, revenue has beat our estimates, so has GMV growth, much better than our estimates. The EBITDA loss, Varun, remember, has reduced this time from 162 crores from 178 earlier. The negativity in EBITDA margins have also reduced. So I would say this is a big green flag coming in from Blinkit. Average monthly transacting users are up. Some cities are already delivering a 2.5% plus EBITDA. And the management has also said that the margins have bottomed out, so looks like only better days ahead.
Snehi, you yourself told the bear case because you said the EBITDA loss. It is still a loss. A loss is a loss, and we don't know when the company will come into profit in the overall quick commerce business. Also, if you look at the overall competition, that has been increasing. So you might tell it as a tailwind, but I still think even quick commerce will sooner or later be a headwind for the company, just like the food delivery business.
Let me try and change your mind, Varun. One last segment, let's take a look at the Hyperpure business. This time the numbers are much better than our estimates. Revenue has gone up by 89%. We were expecting a 75% year-on-year jump. What do you have to say here?
You trust the management? They said it's going to be a degrowth into the business in coming quarters, and especially on the non-restaurant B2B business that is going to shrink. So again, that's a pain point for the company.
Well, Varun, you and I may keep bickering, but let's take a look at what the investors are doing, and that's priced in the share price right now. The stock is surging. So, well, we'll leave it up to our viewers to decide where they want to tilt on the bull case or the bear case.
So that was a strong absolute tug of war, our bull versus bear scenario segment for Eternal. And of course, we ought to do this because the stock is performing and trending since last 2 trading sessions. But moving ahead, would Elara Securities revise the target price for Eternal? That's a question again. We caught up with Karan Taurani, Senior Vice President of Elara Securities, to know more on this and the key reasons for revising the target. Let's listen in to his rationale.
So our price target has been revised upwards from 300 rupees to 340. Primarily, the reason for this is two. One is, of course, the better growth in the food delivery business, which will lead to better valuations for the food business on an overall basis. Second reason is a mild better growth in the QC business because of better store addition and because of the non-metro market picking up. Third is, of course, the profitability in the QC business. So we see profitability in the QC business coming back on track. And basis that, there's a re-rating in terms of valuation multiple of the QC business. So if you look at the QC business, until about 6 to 8 months back, when we saw this entire threat of new entrants, Amazon, Flipkart coming to the fore, JioMart getting aggressive, the quick commerce business actually went through a lot of re-rating in terms of valuation multiples. Zepto went into a price war. So I think all these things are now starting to cool off. The worst is behind us as far as competition is concerned. The worst is also behind us in terms of price war from Zepto. So basis that, I think QC business will see a re-rating in terms of valuation multiple, which will also drive share price performance. So basis all these parameters, we have graded our target price to 340 for Eternal.
After Eternal, let's shift focus to Infosys. IT giant Infosys is set to release its Q1 numbers, while the street is expecting pressure on profitability. What else is on the radar? Let's go to Pulkit to find out the same.
After TCS, Wipro, HCL Tech and Tech Mahindra, now it's time for Infosys. So if we talk about the expectations from Q1 result, in the USD terms, the revenue could be up around 3%. In INR terms, we are expecting around 2.3% upward movement in revenue. If we talk about EBIT, we are expecting somewhere around 3% up. If we talk about EBIT margin, we are expecting it to be flat, around 21%. And if we talk about profit after tax, we are expecting to go down by around 3.5%. If we talk about the management commentary expectation, we are expecting the deals to be stable, around $2.5 billion. We are also expecting a weak discretionary spending in manufacturing and retail segment clients. We are also expecting the guidance to be maintained, that was around 2 to 5% in the growth, and for the margin part it was around 20 to 22%. Company had given this guidance in the last quarter, so we are expecting that company will maintain this. The key monitorables that will be to watch out for: US business and the BFSI segment business, how it is performing for the company, the deal pipeline and the Gen AI impact on the business, any changes in the FY26 guidance that company had given in the last quarter, what is the outlook on the discretionary spending from the clients, and the most important thing and the last, that is headcount and attrition trend, how it will perform. Once the result will be out, we will update you.
All right, thanks for all of those updates, Pulkit. Infosys, we'll keep an eye on the results, and once the results are out, we'll give you the reviews as well. Let's go across to Ravinder and understand all the stocks and news on the exchanges. Ravinder, over to you.
Well, as on back of Q1 FY26 earnings, Zee Entertainment is in focus, where Zee has their Q1 FY26 number, and company's revenue saw a decline of more than 14% year-on-year basis, but company PAT saw an uptick of more than 21% year-on-year basis at rupees 143 crore, but company's EBITDA saw a decline of approx 12% year-on-year basis at rupees 239 crore. So overall, a weak set of number from Zee Entertainment. Apart from this, Titan is also in focus on back of their acquisition, where Titan, through its wholly owned subsidiary, will acquire a 67% stake in Damage LLC. The holding company of the MS jewelry business in the Gulf Cooperation Council region from Manai Corporation, and the enterprise value of $283 million, which is equivalent to rupees 2,438 crore. Apart from this, M&M Financial is also in focus on back of their Q1 earning, where companies reported NII at rupees 2,013 crore with an uptick of 13% year-on-year basis. And if we talk about PPOP, then PPOP saw an uptick of to 19% year-on-year basis. And companies gross NPA company reported at 3.85% as compared to 3.69% on a sequential basis. Apart from this, MRPL is also in focus, where management in the con call said that the management, they expect GRM to be in the high single digit in Q2, which is supported by stronger middle distillate cracks, which is approx 50% of the product slate. And lastly, Havells India is also in focus on the back of brokerage upgrade, where BofA Security has come out with a note and they have upgraded the stock to buy from underperformance rating and high target price rupees 1785 as compared to earlier target price rupees 1400. And they say that the company's wires and cable segment continue to outperform and festive tails ahead for the company. So back of this, Havells India is also in focus.
Thanks, Rabinder, for that detailed analysis of all the stocks in news. And moving on, there is some more news on the earnings front. Tata Consumers will also report its first quarter earnings, which is said to be a mixed show as per estimates. Healthy growth in its food business. Beverages may underperform. Snehi is joining in with all the expectation with the street is penciling in.
Consumer for Q1 this time around, we're expecting a mixed bag set of numbers. On a consolidated year-on-year basis, revenue is expected to come in at 4,813 crores, which is an uptick of 10.5% on a year-on-year basis. Its EBITDA and EBITDA margins, we're expecting to see a slight bit of pressure, because EBITDA we're expecting to see a cut of 3% on a year-on-year basis, and the margins also, we're expecting a slight contraction this time around at 13.5% compared to 15.3%. On the flip side, some positivity being seen on the net profit front, aided by other income this time around. Net profit is seen at 355 crores, an uptick of 22.5% on a year-on-year basis. Overall, lots to watch out for when it comes to Tata Consumers, given the wide and the big portfolio they have in terms of their several businesses. Overall volume growth is expected at 6%. Tea volumes are expected to grow 3 to 4% with a value growth of 6 to 7% on a year-on-year basis. Indian beverages, the ready-to-drink portfolio could be muted due to a shortened summer season this year on the back of early monsoons. So on the back of that, RTD volume is expected to grow 10%, but value growth is expected to be absolutely flat. Salt to perform well. Capital Foods and Organics India is expected to do well. Sampann is likely to grow between 25 and 30%, while Soulful also shall keep its strong trajectory going. Overall, India Foods like-to-like revenues growth is going to be 14% year-on-year. International biz, we're expecting to see a 4% year-on-year growth in terms of constant currency, and non-branded business also expected to grow 8% year-on-year. When the numbers do come out, it's going to be important to watch out for their commentary on raw material inflation in terms of tea prices, coffee prices, any price hikes if they've undertaken this quarter, to what extent, how much of it has been passed, how much has been absorbed. All eyes are going to be on all of these factors, but well, yes, mixed bag from Tata Consumer is what we're expecting.
Okay, so that's an eye on Tata Consumer. We'll keep a note on this and also keep reviewing the stock. But then apart from this, we also have a lot many cues, events and triggers, economic indicative action to watch out for. Snehi, what are the triggers for tomorrow?
Well, yes, lots of cues to watch out for in terms of macroeconomic action back home. Not much is expected, but from Eurozone, you have the consumer confidence numbers coming out. In terms of global earnings, all eyes are going to be on heavyweights, Alphabet, Tesla, IBM and SAP, that are going to be coming out with their Q2 numbers on Wall Street. But shifting focus back home, 3 Nifty heavyweights will be coming out with their numbers, the likes of Infosys, Dr. Reddy's Labs and Tata Consumer. And from the broader end of the market, also a whole host of companies like Persistent Systems, Mahindra Holidays, Syngene, AB Real Estate, Mass Financial, Coforge, Thyrocare, OFSS, SRF and a whole host of companies will be coming out with their numbers, so watch out for all of these stocks. In terms of annual general meetings, so keep a close eye on Syngene International, Bajaj Housing Finance as well as Mahindra Holidays. In terms of corporate action and board meetings, also lots to watch out for. Mahindra ratio 3:8. Aditya Birla Real Estate and SRF board, along with their earnings, are also going to be mulling fundraising, so watch out for that. IndusInd Bank board is going to consider and approve proposals related to issuing long-term bonds or debt securities on a private placement basis, so IndusInd Bank will also once again be in focus, and it will be last day to buy the shares of Cholamandalam Investment, CG Consumer, and Hero Motor to be eligible for their dividend record date if you wish to do so. In terms of other events, winning the AI race event is going to be taking place in the US, and Donald Trump is expected to speak. PM Modi will be visiting UK and Maldives from the 23rd to 26th of July, and we understand from reports that the next round of Russia-Ukraine peace talks will also be taking place. So watch out for all of these cues, all of them very important to track.
All right, Snehi, thanks for joining and telling us cues to watch, and a lot of cues actually to watch out for tomorrow. With this, it's time for a wrap in this edition of Your Trades. On behalf of Mansi, me and entire TNOW team, thanks for watching.
Thank you.